The price increase yesterday got my attention, Bill, and just to put it in perspective, the stock went up $8 billion, and the bottom line incremented by $20 million. So the delta on earnings was capitalized at 400 times. And I've been around quite a bit through the years on the street. I've never seen a 400 multiple put on earnings growth. Now, what Netflix is doing is getting into the content business, what we call curating content. They're producing some content themselves, and they're buying it for their exclusive use. Other companies do this, and they basically hired somebody from another company to help them with it, that company being NBC. Those businesses are capitalized in the market at 10 to 15 times. So you're paying an awful lot of money for Netflix. There's no free cash flow. They're increasing their estimates of the degenerating level of free cash flow. It's now at $1.5 billion. It's a very, very mediocre profitability on a return on assets and return on equity. It's a very high valuation. I don't think there's any margin of safety in the stock.
Okay, Tuna, we just showed that Netflix actually outspends NBC in content this year. So that $5 billion number returns, it's going to be $6 billion, they say, next year. Are they spending too much on content?
Well, that's one of the most recurring questions we hear. So we do acknowledge some trepidation in terms of the growth in content spending for Netflix. And by the way, that's not just Netflix, but across the industry, even on linear television. So I think what's happened, Kelly, is becoming a lot more difficult to break through the clutter. So on the other side, you have the demand that seems insatiable. So we do think that over the long term, certainly in the near to medium term, we think the monetization opportunities for content have never been greater. So in the case of Netflix, sure, there's valuation questions. We kept our buy recommendation. We do think that content should be viewed as a quasi-fixed cost, because what's happening is that as they expand internationally, they can leverage that content on a broader scale and monetize it even better. So there's a case to be made that this type of content spending can be certainly sustainable in the near term, and the price increase that Larry talked about should provide them some cushion in terms of the near-term free cash flow deficit.
Okay, let me just, you sort of brushed aside Larry's point on valuations. Let me probe that a little further, Tuna. I mean, that is a pretty high valuation for any company, not just Netflix.
That's correct, Bill. I think Netflix is, defined conventional valuation metrics, but you can look at it from the point of view of the international. We don't think the international upside is anywhere close to being fully recognized by the street, and I think that's where the disconnect is coming from. When you take a broader look at the upside, they just kind of launched across the globe. They've reaffirmed their outlook. We think that second half next year is going to be an inflection point. And a lot of analysts, I think, are missing that in terms of how soon this spending is going to start to turn around in terms of the payoff. And by the way, by any number of measures, whether qualitative or quantitative, we think that the payoff on that content spending is justifiable. Subscriber and retention growth, churn, etc., and also viewer engagement. All of these things bode well for continued, spending.
Larry, what's your point of view on their spending on content costs, or their spending on content here?
Well, the question is, are they buying the right content? And that's a very, very tricky act, Kelly. There are 400 serials in production right now. Ever since Sumner Redstone said content is king, everybody wants to get into the content production business. And the question is, how do you know what is good and what's not? And in the case of Netflix, when they buy stuff that's what isn't good, are they putting it through the income statement? You take Marco Polo, which was an expensive series that they did a couple years ago. Has that gone through the income statement? We don't know. There's an awful lot of content sitting on the left side of the balance sheet right now, and the history of media, you go back 30 years, there were companies like Coralco and Canon that really hit the wall with content problems, bad content not having been written off. And when you get into the world of parallel metrics for stocks, as opposed to good old-fashioned cash flow, profitability, balance sheet integrity, that kind of thing, you're in treacherous water.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.